Our cycles tend to vary in their strength, what's called the amplitude of a cycle, and they tend to vary in amplitude. The principle of variation doesn't only apply to wavelength, it also applies to the strength of the cycle, the amplitude of the cycle. So the 40-day cycle, sometimes bounces with quite a lot of strength, and sometimes it has very little strength. The resultant price movement, you must remember, is a combination of all the cycles. And there are, in fact, mathematical processes that one can use to extract the amplitude of individual cycles. And in fact, Sentient Trader does do a little bit of that. But those mathematical processes are not terribly reliable. Let me just say that and move on, because I can speak for hours about that, and I won't today. Okay, so the longer-term picture, the 4.5-year cycle is moving downwards. The 18-month cycle is moving downwards. Okay. Let's take a look at the closer term picture and see what has been happening over the most recent 18-month cycle. So the most recent 18-month cycle bounced up out of the trough on the 4th of October, which occurred around the world. So that was an extremely important trough and a very interesting trough from Hurst's cyclic perspective. Hurst proposed something called the principle of commonality, which is that markets around the world all tend to move with elements in common. And part of that, troughs tend to form at around about the same time. And if a trough occurs around the world in many, many, many different markets on exactly the same day, that's a sure indication that that is a very, very important trough. And just as a little aside, in the third week of October last year, I was presenting a talk about her cyclic principles, of course, in Canada at the annual conference of the Technical Analysis Society in Canada, and it was only a few weeks after that October trough. But the fact that that trough had occurred, first of all, in such a strong, powerful way, but also that it had occurred on exactly the same day in so many markets, was reason for us all to be absolutely convinced that that was a trough of at least 18-month magnitude. In fact, I know one Sentient Trader user who sent me an email on the Friday, which was just a few days after that October the 4th email, saying because of the strength of the move and the fact that it happened synchronized in so many of the markets that he followed, he was convinced that was already the 18-month cycle trough. So anyway, there are just a little anecdotal story. Okay, so what has been happening? Well, as you can see, according to this analysis, the 18-month cycle trough, of course, occurred on the 4th of October, and as we've spoken about in all of our previous Oz Trader chats, the 20-week cycle trough most probably occurred on the 6th of March, which is a difference to the analysis that we have currently running in the US markets, which is that the 20-week cycle trough occurred on the 30th of January. Does that mean one of these analyses is wrong? No, not at all. That is the fascinating part about analyzing markets using Hurst cyclic principles. You must analyze not only one market to make a decision in that market, you should really analyze few markets, particularly markets that are unrelated, because they will provide you with very interesting evidence in terms of what's happening in both of those markets. So the fact that we have those two cycles, those two 20-week cycle troughs on different days in those two different markets, doesn't mean one is wrong and the other is right. It means that the cycles are unfolding slightly differently in Australia to the way that they are unfolding in the US. And that is always the case. As a South African myself, I grew up and started trading in South Africa. I used to day trade American futures in the S&P 500 and the NASDAQ from South Africa, which was a really interesting process, because as the South African markets were winding up for the day, of course the American markets were only beginning to open, although futures are a 24-hour market. But there's a very interesting interplay between the markets. So the trough that we've been watching in the US markets as the 20-week cycle trough is a trough of only 40-day magnitude to the 30th of January in the Australian markets. So what does that mean? Well, What it means is that what we're expecting to happen at the moment in the market is the formation in the Australian markets of an 80-day cycle trough, as you can see. Here is that 80-day cycle trough, and that trough is expected to form right about now. Now, of course, if you look at the market, you can see it came down hard on Friday, as it did pretty much around the world. And so it is possible that that trough is a trough of the 80-day cycle. So let's take a look at the evidence and see whether that 80-day cycle has actually formed. Before we do that, I'm just going to put a bar count. One of the very important things that you always want to do when you're considering an analysis is have currently visible to you the bar count from previous important troughs. Okay, so from the most recent 18-month cycle troughs, there have been 233 bars, which means that 33 weeks have elapsed. Now, the 40-week cycle, we know on average, should be about 39 weeks in length. As you can see, according to this analysis, the current average length of the 40-week cycle is presented down here at the bottom of the chart. If you don't want to pop up the cyclic model table, which gives it to you, is currently running at 33.5 weeks. So in other words, this cycle is currently running about 6 weeks short. Shorter than is expected. Principle of variation, of course, allows for that. 6 weeks short is, let me see, what sort of a percentage? It's about a sixth, which must be about 14% short. 13 or 14% short is not too big a variation at all. A 14% variation is a perfectly acceptable variation. So it is quite possible that the 40-week cycle is currently running about 14% shorter than it does usually. Okay, the other thing that's interesting to notice is that the 40-week cycle, the average length recently has been 33.5 weeks. And as I've just done with this bar count tool over here, you can see that the number of bars since the most recent 40-week cycle has been 33.3 weeks. So according to that, we would be expecting the 40-week cycle to appear within the next week, if you like, and you can see that with this circle and whiskers. Here is the circle and whiskers for the 40-week cycle. So the 40-week cycle is expecting a trough to be occurring in this week. Okay, and the whiskers that are on either side of that show us that, in fact, the 40-week cycle could occur any time within this range. Okay, so now, is it possible that the trough that formed on Friday is a trough of the 40-week cycle? Well, the important thing to always bear in mind with Hurst cyclic principles is that multiple cycles are at play. So although the 40-week cycle trough might be expected in this week, according to the average length of that cycle, we need to look at the breakdown of the smaller cycles to see whether, in fact, it is possible that that trough has occurred in this week. And the answer to that question, of course, is probably not, because you can see through these linked grey boxes that for the shorter cycles to line up, the cycle trough probably needs to occur a good deal later. Okay, so that 40-week cycle is probably not going to occur right now. Okay, let's add a few more bar counts onto there to see what else we can say about this. Okay, the 20-week cycle has been positioned in the first week of March, which I believe is a good position for that particular cycle. There are alternatives, of course. It could have been positioned here on the 30th of January, but that would have meant that rising out of the 20-week cycle trough in this particular analysis, we had a very poorly shaped trough. And let me show you what I mean by a poorly shaped cycle. Here would have been the first 40-day cycle coming out of the 20-week cycle trough. Okay, so if we move the 20-week cycle trough back to there, we would have had a 40-day cycle which was shaped like that, which is not impossible. It's a good shape for the 40-day cycle. But let's extend that shape and look at this cycle shape of the next 40-day cycle, which is that, which would have ended up with an 80-day cycle that went up, down to a lower trough, and then up again. That is what we call an inverted shape. Why is it called an inverted shape? Because we expect cycles to look a bit like a capital M, like that, which means that the middle trough, the intermediate trough, the trough of one cycle shorter, is generally above the start and the end point of the cycle. That's a well-formed cycle. And this cycle, as you can see, is an ill-formed cycle because the intermediate trough drops below the first and the last. That is why I believe that the 20-week cycle is much better positioned for the Australian markets here in the first week of March. Okay, so we're going to keep going with that. Everything you do when you're trading markets according to Hurst cyclic principles, everything you do, all the trading decisions you make, are the result of your phasing analysis decisions. Okay, so standard trading disciplines like keeping a trading journal are very important when you're doing any trading, and they're particularly important when you are trading using Hurst cyclic principles, and that is one of the reasons why Sentient Trader in fact keeps a trading journal. Here we go. Let's view the trading journal. Now, I know that possibly many people just completely ignore the trading journal. I'd encourage you not to. The trading journal is an extremely important part of Sentient Trader, and there are various ways that you can change the content of the trading journal. Mostly the trading journal only puts in information about making trading decisions, as you can see here. That's the setting that I have at the moment, that it only puts in information about the trading decisions that are made as a result of the analysis. However, what is a very important thing to bear in mind is that all trading decisions are made as a result of the phasing analysis. Okay, that's a terribly important thing. So if I change this phasing analysis and moved this trough from 6th of March onto the 30th of January, okay, which you can do easily with Sentient Trader, if I'd done that, then I would have a different analysis and I would be making slightly different trading decisions. So that you can track the analysis as well as the trading decisions, you should go